What's the global economy look like from your lens right now?
I think the economic setup is pretty constructive, especially in the U.S. But broadly, I think it's relatively constructive. You've got a confluence of lots of stimulative fiscal policy in developed economies. You have a general deregulatory trend and tone, both in the U.S. and Europe, particularly in the U.S. after a very, very difficult regulatory environment under the Biden administration. I think the Trump administration is moving quickly to rebalance regulatory burden, and I think there's a desire in Europe to also improve, the regulatory situation. That's quite stimulative. Massive AI investment, infrastructure investment around the world, which is also quite stimulative. We've been in a monetary easing cycle, which also creates tailwinds. And we have midterm elections coming up in the U.S. where you certainly could see, specific policy actions, particularly around, affordability that also could be stimulative in some way. So, economically, things set up nicely.
But?
Well, I wouldn't say but. A little bit the same as last year. There's a lot going on geopolitically. There's a lot going on in the world. And as that stuff plays out, it can lead to speed bumps or, distractions. We saw one in April with the rollout of the trade policy that kind of slowed the economic momentum down. We then saw a pivot. We got through that. Obviously, there's a lot of noise at the moment when you talk geopolitics or you talk kind of global economic order. And people invest, people move forward when they're confident. The noise sometimes can sap confidence.
Yeah.
I think at the moment, generally things look relatively green, but that doesn't mean there aren't issues that could pop up.
Well, you just came back from Davos, and the ruptures, the cross-Atlantic relationship seems to be frayed at the edges, if not at the core. How does that disrupt what's been a long-time alliance between the EU and the United States?
Well, I think the word frayed is a much better word than ruptures. I don't think there are ruptures.
I altered my words.
Yeah, I think there's a lot of noise, and that noise frays trust. Trust is built over time. Trust in important, relationships around the world between nations is really built through sacrifice over time. And, when there's noise, it can fray those relationships. I think the fundamental relationships are still strong, but I certainly, in Davos, sensed a level of frustration around some of the policy debate. But I think that stuff will get past. One of the things that I'm spending a lot of time doing is thinking about what's noise and what's the substantive issue. I do think we're set in a place where we actually can make progress on a bunch of the substantive issues. But we certainly have, an administration in the U.S. that's shaking things up, and that sometimes leads to, to fraying or concern and a bunch of noise.
How's your relationship with the White House right now?
Our relationship with the administration, is very, very good. One of the things that I've said publicly that I really appreciate, this administration is open for business and it's engaged with business. In the past administration, we had trouble engaging the administration. This administration takes your calls, will listen to your point of view. They may not agree with everything. We push back, privately and tell them when we don't agree. But they are open for business and engaged in a very constructive way. And I think that's the way the system's supposed to work.
Not to dwell on it, but I'll just ask one more question on that. It's is it conducive to having, good policy and the relationships when he's suing JP Morgan for, allegations of debanking. He's sort of sidelined Brian Moynihan at Bank of America. He called you out in August for some things, saying you should go back to DJing and the like.
Well, I like DJing.
You like DJing. I know he was hard on Jan Hatzius, your chief economist, for his take on tariffs back in August. But Jan, in his research, has also sort of changed his tune to saying the pass-through on tariffs into the economy is pretty much already peaked. Has it taken a lot to regain the trust of the White House?
I don't look at it that way.
Okay.
I think we have a relationship with the administration. It's a good relationship. We like some of the things they're doing. When we don't like them, we voice our opinion. They like things that we do. When they don't like them, they voice their opinion. Sometimes I wish it wasn't in the media and the noise, but that just goes with the territory. We're focused on how do we grow? How does the economy grow? How do we contribute to helping the economy grow, to supporting our clients who are investing in America, investing in the global economy and trying to grow? And I would say this administration is incredibly constructive on that stuff. And again, ignore the noise, focus on the substance. We're focused on the substance, and you were just reiterating a bunch of noise.
Well, okay, let's talk about some of the numbers that you had, because in the fourth quarter, blowing past expectations in equity trading revenue. What's the market look like with a number of big ticket IPOs coming, whether it's SpaceX or others? What's your outlook?
The environment's very constructive, for our business, particularly our banking and markets business. We highlighted in our fourth quarter earnings, our year-end earnings, that our backlog was again at another significantly high level, and it moved quite positively. I think it's going to be a very constructive year for M&A activity. Could be one of the best years, if not the best year ever for M&A activity. I think CEOs feel unleashed to really invest, drive growth in their businesses. It's a better regulatory environment. They're asking big questions about what the art of the possible is. That's very different from where we were 4 years ago, where the answer to any question was no. Now the answer to any question is yes, maybe, and so CEOs are looking forward. That's a very, very constructive environment for our business. So we expect a strong M&A year globally. We expect a strong capital markets year globally, and we think the firm's very, very well positioned to capitalize on it.
Two Fed cuts are you expecting, and what about Fed independence? Are you worried about that?
You heard Jan's, Jan's position on that. I think a lot of that will depend, on the trajectory of the economy. I think we could see upside to both nominal and real growth this year. That would have an impact on whether or not the trajectory of monetary policy cuts continued.
20% chance of recession, he said, down from 30%. Do you see any risk of?
I'll let Jan be the speculator, but at 20%, the base case for a recession is 1 out of 7, okay, which is a little bit lower than 20%. I think the chance of a recession this year is low in the U.S., and I don't think you'd see one unless there was some exogenous event that materially changed the current sentiment. And I don't think that's a likely outcome. So it's a pretty constructive environment.
Are you seeing a necessary broadening out of the markets beyond Mag 7? And there's also the risk, of course, of a potential bubble.
Well, you've seen a big move in markets away from Mag 7. I think there's been broader participation. I think companies are investing. I think there's a big view that AI productivity is going to move into the enterprise, and that creates flexibility for a broader array of companies to invest. And so I think there's a broader level of participation, and things are set up quite constructively for the next few years. This AI productivity gain in enterprise is a real thing. It's going to take a while for that to be implemented, but we're quite constructive on that and the tailwinds that creates for economic growth and for investment.
Well, that's a good pivot to Hong Kong, because the stock market here regaining the IPO crown last year, and essentially on the back of all these IPOs in the tech sector. A lot of them, really, the big gainers have been the infrastructure and the not necessarily the applications or the large language models. They've been essentially the hardware players, the chips and the like. Do you see a sustainability of this pipeline from China of AI?
If the environment continues to be constructive the way it is now, yes, I think it'll be a very good year for IPOs over here too. I think there's a lot of pent-up capital markets activity because we really, coming out of the pandemic, we kind of shut down capital markets for a period of time. You got a more conducive regulatory environment. You've got a good detente in U.S.-China with a constructive setup in 2024 for more constructive dialogue. I think all that's conducive for more IPO activity here in Hong Kong. And I think you're going to see more IPO activity in the U.S. and in Europe. So it's a pretty constructive setup. Now, of course, if there was a big exogenous event, it could slow it down. But I don't think that's the base case. But that doesn't mean we won't have some speed bumps along the way this year.
We did in the last week get news of maybe Beijing tightening some of the listing requirements for companies here in Hong Kong. There had been a rush to the market, obviously. Maybe there's some discrepancies on whether it's CICC or some of the Chinese banks and some of their underwriting capabilities. How much of an opportunity would this be as well? As the Chinese banks have really upped their game in the underwriting and investment banking game here with listings.
Well, I think it's very, very important to have a vibrant, long-term successful capital market listing venue here that you ensure the highest level of standards. And so, mistakes in underwriting prospectuses, not acceptable. The standards should be high. I think it's good that the regulators are calling that out and asking for a standard of excellence. We're used to operating at that level of standard all over the world. I think there'd be few people that dispute Goldman Sachs' position as the leading one of the leading, if not the leading, equity underwriter in the world over the last 25 years. And we expect to participate very actively in any market, that's vibrant. There's always competition, but I like when people are advocating for the highest standards. That builds confidence in IPO markets, and I think that's something that's very important.
I understand you're heading up to Beijing tonight, I believe. What's your agenda? What's your top priority for the China market right now? Clarity from the regulators, what?
My top priority is to be there to spend time with government officials, spend time with our clients there. I move around the world, and everywhere I go, it's the same agenda. Spending time with our clients, spending time with important, government partners, spending time with our people. And so, I'm back up in Beijing for the next couple of days to do those three things. No different than what I did last week when I was in Davos. No different than what I'm doing here in Hong Kong. No different than what I'll do when I'm back in Washington later this week. That's kind of what we do. Spend time with our clients, spend time and engage with government leaders, spend time with our people, and make sure we're doing everything to ensure constructive markets, strong capital markets, strong M&A environment. And right now, I think we've got a constructive environment for all of that.
What's your number one priority for the China market? I mean, it's kind of a two-speed economy. Obviously, export-driven for now. Domestic economy's troubled. A-share market is doing pretty well, though.
Our number one goal for the China market is the same as it's always been. We've got a big base of clients there, and we're trying to position to help them achieve their goals, whether it be capital raising, advice, consolidation, strategy. Our job is to serve our clients, and that's always our number one priority.
You said you're always on a plane, you're heading around the world. Qatar Investment Authority, you have a new strengthened partnership there, about $25 billion. What does that say about the importance of the Middle East when those Chinese banks I just mentioned as well, they just tripled their number of loans last year to the Middle East, usually Saudi Arabia and the UAE. How important and how strategic would be the place where you invest those funds?
Well, the partnership with the QIA is a partnership to invest all over the world based on our broad global asset management platform. We also have partnerships with clients in China and partnerships with clients in Singapore, with partnerships with clients all over the world. That partnership's a very, very important partnership and a significant partnership. And what the QIA sees is our global footprint, our investing expertise, and in particular, our very, very unique sourcing capabilities to ensure that they get exposure to the most important and interesting opportunities around the world. That's what we do. That's kind of the strength of our asset management franchise. And so, that's a part of the growth in that business, which has been an important key grower for Goldman Sachs.
Let's keep going around the world. How about Japan? I mean, they had the recent bond market volatility. Obviously, there's some concern over the fiscally assertive policies from Takeichi. What's your view right now, given the bond market turmoil?
There's no question that, given the setup over the last 30 years, there's bond market volatility in Japan. Japan needs, a more outward-looking economy and more growth, to really get to a different place than where it's been over the course of the last 3 decades. But we're actually quite excited because we see pensions and corporates in Japan, looking more outward. We see a culture of risk-taking developing in Japan that really hasn't existed for the last 3 decades. And so we're optimistic that through our banking and markets business and our asset management business, there's more that we can do to help clients in Japan. And so I'm actually headed to Japan next month again. And I actually think there's some very, very interesting opportunities to help our clients there and partner with our clients there.
Globally, what are your hiring plans? Do you have a kind of a good map you can reveal to us where you think you need to hire more or where you need to?
We're always looking for great talent all over the world. I think the trajectory of talent growth for us in 2026 will be a little bit slower. But, certainly as you look out 5 years from now, the firm's always growing. It's always looking for talent. And the thing that really differentiates the firm is extraordinary people. So even with the technology tools and AI, our ability to attract, develop, and retain extraordinary people is part of the secret sauce of Goldman Sachs. That doesn't change.
I think Wall Street shed about 10,600 jobs in combined, the big banks, last year. Does 2026 look like that as well? I think that was the most since 2016.
I don't have a view on Wall Street overall and its headcount. I understand our headcount plan. All we've said publicly is it's probably a little bit more constrained in 26 because we see opportunities for efficiency and we're trying to deploy those. But ultimately, we've also said those efficiency opportunities give us more of an opportunity to invest in parts of our business where we can scale growth, and some of that growth scales with additional headcount. I point to our wealth management business, which scales with people all over the world.
Well,
we're excited about that.
Let's end the interview on a moonshot, the prediction markets. You mentioned that, obviously, in the call. Very interested. You're looking at this. You have teams looking at it. What does a foray into the prediction markets look like for Goldman Sachs?
Well, Goldman Sachs to some degree is in prediction markets because we operate derivative contracts.
Yeah, right.
And
but really pegging it to real life events, that kind of thing.
I think there are interesting things going on in the prediction markets that would allow our clients the opportunity to think about and hedge risks that are inherent in their positioning. And I think that's super interesting. So obviously Goldman Sachs, given what we do, given our position in derivative markets, would be anxious to understand that, partner with some of those prediction markets, or develop capabilities of our own that give our clients access to that with depth and liquidity that doesn't yet exist in those markets. But if you can develop depth and liquidity, in those markets, it allows, very interesting ways to hedge and think about positions that people take.
Does a partnership or a merger acquisition happen this year?
Nobody's talking about, merging or buying these businesses. These are early stage things.
Yep.
And I think they're very, very interesting for people that are interested in market risks and how you hedge different market exposures. But it's an extension of stuff that's been going on in the regulated financial markets for a long time. And of course, that's going to interest Goldman Sachs and interest our clients.